Hi, everyone. Welcome to the 107th episode of the Timing Research Show for October 10th, 2016. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 159th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Dean Jenkins back to host today, so I'm going to go ahead and turn it over to him.
Okay. Hey, thanks, David. Thanks for having me back to host. I always look forward to this. This is a great show, and I learn stuff from the panelists every week. So we got a good lineup this week. We've got Sam Bourgi of Trading Gods, James Ramelli of AlphaShark, Jason Pearce of Smart Money Investor, and Cameron Yost of TradingWorks. And I think my job as a moderator today is going to be easier than the crew last night. That's for sure. And I think the panelists here are going to be, I'm sure, better behaved than the folks last night. But I'm really looking forward to it. Let's just start off having each person introduce themselves and talk a little bit about their service. So we'll just run through that same order. Sam,
great.
Kick us off.
Awesome. I think this is my 7th or 8th time on the show, so it's always awesome being on here. My name is Sam Bourgi. I'm a markets editor for TradingGods.net, and TradingGods.net essentially is designed to help traders better understand and access volatility as an asset. So our goal is to really focus on the VIX, the VXX, the VIX ETNs, ETFs, options, and futures, and to help traders better understand volatility as an asset and how it relates to U.S. equities and the S&P 500. So I'm publishing daily articles on TradingGods.net as well as weekly webinar series, and looking forward to the discussion as always.
All right, thanks, Sam. I like the VIX. I think it's really interesting. So looking forward to hearing what you have to say. James, I know a few folks have had a little technical trouble, but if you're with us and if we can hear you, please introduce yourself.
Can you guys hear me?
Yes.
Yeah, you're good.
Okay, perfect. Had some troubles there, but my name is James Ramelli. I'm a trader here at AlphaShark Trading, and our main approach to the market is using equity options to try and figure out what it is institutional traders are doing with their risk capital at any given time. So all day long from open to close, even as I sit here right now, I'm taking a look at all of the equity options order flow across every single exchange in the country to try and find the unusual and interesting trades that are coming across from institutional order flow. All these trades that I'm trying to flag are going to be at an unusually large size or volume for the given individual equity or ETF that I'm trying to track, and I'm using that to glean information off of institutions about what they think is next for the market. It's a little bit easier said than done. A lot of participants in the equity options market are hedgers. So our main goal on a daily basis is to find the speculative equity options order flow from institutions and then use that information to figure out what it is they think is next for the market. It's really difficult to do that with futures or stock as there's dark pools and places they can take their order flow off of the exchange. So we believe equity options is the best window into that world of institutional trading.
Thanks, James. And I always enjoy being on the show with you, and your insights. I like them. I think what you guys are doing is really interesting. Jason, if you introduce yourself.
Sure. I'm Jason Pearce, Smart Money Investor. My background, actually, I started in the commodity business when I was a teenager. My dad was a trader, started a brokerage firm. Several uncles were traders and brokers. So I was kind of doomed to be a trader. It was my fate. And I'm fine with that. Cut your teeth on the futures and learn. If you can survive that, you can trade anything. And what I'm focused on over at Smart Money Investor is, it's very simple. I've gone through in my 25 years of doing it, the simple to the complex to, good for my ego because I sound smart, but is it good for my bottom line? Not really. So you get to that point where you start stripping it back to the basics, and I'm very pleased and thrilled to find out the basics is actually what's going to work best. So one of the things I teach is called the Master Trend Trader. And it's trend following, but we just try to find that real sweet spot inside the trend instead of capturing the whole thing. We want to find almost a price vacuum where we can get in on very small retracements, get right back in sync with the trend that's running, and basically create high risk reward situations. And that works on stocks just as well as it works on currencies, just as well as it works on futures.
All right, thanks, Jason. We got a question later in the show that's going to talk about what's made you successful as a trader. So maybe we'll get to hear a little bit more about that as well. And it's interesting to hear that you started as a teenager. You know, I've got a 18-year-old son, and he has absolutely zero interest in the charts on all the monitors in my office. So maybe he's not doomed. All right, Cameron, hear from you. Oh, looks like we lost Cameron. So hopefully he can.
Audio problems. Hopefully he'll be back on.
Okay, that's too bad. I hope he can make it back in, because Cameron's always got something interesting to say. That's for sure. But we'll just press on, and if he joins back in, we'll get him caught back up. So let's just move right into the first question, and this is the one, the big question of the day, and that's, what direction do you think the S&P 500 index will move from this coming Monday's open to Friday's close? So we'll just start giving your direction, and then we'll come back around and rate your confidence and your reason on that. Okay, so in fact, no, give your direction and your confidence, and then we'll come back around and talk about your reasoning for it. So we'll keep this order, and Sam, what do you think, up or down, and what's your confidence on that?
Sure. So in terms of the S&P 500 this week, I think that it's going to edge higher. And my confidence, I would say, is around 65%.
Okay, 65% and higher for Sam. Okay, I'm keeping score here.
Oh, uh-oh.
Like I said when I opened, I think everybody here will be better behaved than the panel we watched last night. But I hope we do have a little bit of, different opinions, and then some rational support for those opinions. James, what do you think?
So I think that we're going to edge higher this week, and really the main reason for that is because we're up so much today, and that markets really aren't expecting a whole lot of movement through the end of the week, and I'll talk a little bit about that when we come back around, but I'm fairly confident that I would say with about a 70% confidence.
Okay, higher with 70%, so 2 for 2 on the upside. Jason, what do you think?
I think we're going to crash. Now, originally I thought we were going to go up, but if the other two guys say we're going up, we can't all be right. So somebody's got to play the devil's advocate right here. In all seriousness, though, unfortunately I'm going to be on the same ship. I'm looking for us to go higher, not phenomenally higher, but I am looking for the direction heading north, and my confidence is probably about 60%.
Okay, higher and 60%. Okay, 3 for 3. So Cameron still hasn't joined us, so I'll give my my forecast, and it's I want to wait till tomorrow. I don't want to give an answer, right? I think Alcoa is reporting tomorrow before pre-market, and that may be really important. Last week we saw Honeywell and PPG come out with some reduced guidance. I think the market is more sensitive to normal to bad news or even neutral news, and that may be really important. But the question is based on today, not tomorrow. So I have to say higher, and that's just because I'm a technical trader. I believe in the reality of the charts, and right now, the charts are saying higher. If you fly an airplane on instruments, you got to trust your instruments, and they're pointing higher. So I'd say higher, but a little bit lower confidence. I'm at about a 55%, and I think something could come into the market quickly that would take it lower, but everything's green right now, so I'm a reluctant higher. Okay, well, let's loop back around. I'm looking, still no Cameron. That's too bad. I always like hearing from him, but let's just press on then and give your reason. If you want to show a chart with some indicators or any kind of technical analysis or views, go ahead and give us a little more depth on the reason for your answer, and we'll just loop back. And Sam, what you got?
Well, James mentioned it really well. I don't foresee a lot of activity this week. You look at the economic calendar, there's not a lot of events coming up that I would say are key market moving events. After Friday's Goldilocks non-farm payrolls report, I still think that things are going to start trending higher. There's plenty of scope to move higher for the S&P. Also looking at volatility, volatility right now is hovering in the low 13s on a scale of 0 to 100. So volatility remains relatively tame, and I think there's just enough scope for us to continue higher. I don't expect to see much from the Wednesday FOMC statement. I think it's going to be mostly status quo. So I just see the market trending a little bit higher this week, although I do think it might be choppy. I mean, we saw in September a lot of really, really highs, quick ascensions, as well as followed by steep declines. So it might be a choppy week, but I think that given the lack of major drivers in the market and looking at volatility being as low as it is, I expect us to edge a little bit higher end of the week.
Okay, good. Thanks. James.
Yeah, so I mean, the main reason for my answer has to do with today's price action. We're up, and I'm going to assume that we're going to finish the day right around where we are right now, maybe up by about 15 handles in the S&P futures. But if we take a look at what they're implying through the end of the week, and something just happened pretty recently that makes this this analysis a whole lot more interesting, is that they now list 3 separate expiries in SPX options every single week. So I can take a look at expectations as they're being priced into the options market by market makers at 3 discrete points throughout each week, which is really great because it tells me how expectations are being priced in, and I can kind of take a look at what expectations are with certain data events that are happening in the week and without them. And we have a Wednesday expiry and a Friday expiry still left to go this week in the SPX. Between now and Wednesday expiration, they're looking for about 12.5 points in the SPX and about 18.5 points by the end of the week. And if we take that on a day-to-day basis, the options market is not expecting much of anything, right? We're not going to see a whole lot of intraday action. We're already up about 15 points from this morning's from Friday's close. I really don't see us seeing a whole lot of action this week. Dean, you mentioned Alcoa earnings. Something that I think is pretty interesting there as well is that, you know, those types of micro catalyst events are really the only thing we have on the calendar this week that we could consider exciting. The banks start to report Friday, but even taking a look at Alcoa, the stock had a reverse split, is now trading around 31.5. Markets are expecting about $1.60 worth of movement by Friday. It's about 5%. On average, Alcoa moves on earnings about 6.4%. So even in these individual names that are having catalysts this week, the market makers really aren't expecting that much action. And unfortunately, I think this is going to be the case until we get up to or maybe even through the election. And we've been seeing this on a weekly basis. We come in on Monday morning and it's like, wow, we're really not pricing that much movement into the S&P this week. And it makes it difficult for us as traders because, you know, when volatility keeps moving lower, premium erodes, so you can't be long premium, but there's also not really a whole lot there to sell. So I think focusing on those micro catalysts like those individual names, Alcoa, this week is really going to be the name of the game, as I don't really see us moving that much in the broader indices.
Yeah, I agree with that. And again, I really like your analysis on, you know, the expectations that are that the option pricing implies. I think that's a really interesting analysis. And, you know, you mentioned the election, you know, particularly it's been a tough day trading environment. You know, there have been very few days that actually had a real trend that you could trade if you're, you know, if you're an intraday trend trader. And, you know, it wouldn't be a bad strategy to shut the PC down, go do some studying or something else for a few weeks and come back and then trade the volatility and the post-election moves, whatever they are. But good comments. Thanks. Jason, what do you think?
Well, you know, unfortunately, I have to agree that it's going to be somewhat limited. I mean, gosh, if you look at us going into early September, depending on your volatility measurement, you could say was the quietest in 40 years if you're looking at the width of the Bollinger Bands. Or if you're looking at the percent range of the Dow for, I think, a 40-year period, it was the quietest in 100 years. And, you know, we all talk about the calm before the storm, don't sell a quiet market, yada, yada. So after Labor Day, the market has that big breakdown. We think, well, here we go. Goes right back up. We've been stuck in a range ever since. However, the reason I'm so biased to the upside is twofold. Number one, the seasonals. We got through what's statistically the worst performing month of the year, which is September. And also, if you look at seasonals for the election year, typically after the first week of October, the market starts to rip higher with an overall upward trajectory through Thanksgiving. So those are your odds. The other thing I do like on there, even though it's capped and range bound, the fact that the rallies for the last several weeks, at least a month, keeps banging around into the 50-day moving average. And I'm kind of the opinion that the more a market tests a support or resistance level, the more likely it is to eventually give way. So the fact that we keep rallying right into the 50 days seems that the odds are higher that one of these days we're going to poke through it, close above it, and that might actually start bringing some more buy orders in.
All right, thanks. Yeah, your comment on the the narrow range of trading, basically through most of the summer, saw that too. That was, I run a day trading trading room, and that was awful.
Yeah.
That was just awful, right? There was just you sit there and do puppet shows because there's nothing happening in the market. But it will break out, right? That's a sign, I think, of instability, not stability, right? Prices do break out, absolutely.
Sure.
So I'm going to show my chart here. Hope this is sharing adequately. I've got the E-mini, the S&P 500 futures contract on a 60-minute chart showing here. And I'm a technical trader. I think all the information, all the fundamentals, all the news, all the monetary policy, fiscal policy, that all matters, but it's really how the market responds, how the participants act on that information. That's the reality. There's only two realities in the market, price and volume, right? And they're the response to all that information. So I don't need to go study too much of that information. I just need to look at the chart and see how people are acting on that information. And what we see here is it is not, I use a combination of Elliott wave and Ichimoku cloud. And Elliott wave is awesome, but not every chart has an Elliott wave pattern. That's a mistake people try to make, is to try and stare a pattern onto a chart. But if it's there, it's there, and if it's not there, it's not there. And right now it's not there. And all we have is we are above the Ichimoku cloud, trending up. We've taken out some previous highs, and if we look at Dow theory, in the very short term, we've had a sequence of higher highs, higher lows, higher highs, and so it's trending up, right? We're trending up. We're above the cloud. The cloud's trending up. The oscillator's gaining momentum, so it's moving up, and that's really all I can say about this on a 60-minute chart. So you got to go with the current trend, even if it's a short-term trend. I'm bearish on the market on a longer-term trend. If we look at a 7.5-year bull market that's consolidating, just a normal part of the ongoing market cycle is it's about time, for this thing to have a healthy, normal retracement. But there's no evidence of that starting yet, and I can't wait till we get it, because the market goes down a lot faster than it goes up, and there's a lot of profit to be made in a down market if you're prepared for that. Okay, so that takes us to our next question, and that is, it's a bonus question that the survey respondents, it's a great question, and it can open up some really, really good discussion. And I think, Jason, it was you who talked about it just a little bit earlier, and that is, part A of question is, do you consider yourself a successful trader? And if you're here on this panel, I hope the answer to that is yes. So part B would be, what are some of the most important elements to you becoming successful? And if not, what do you think is keeping you from becoming successful? So we'll just go back through our order here. And Sam, assuming you consider yourself successful, what do you think some of the most important elements were to getting there?
Sure. So we'll operate under the assumption that I am successful then.
Yeah, let's do that.
Actually, looking at the respondents here, the very last point, it says, good training, experience, and much hard work. I think a lot of that is definitely true. I mean, in my experience, I've always been fortunate in that I spent years in the market without actually trading. I come from a research background, so I worked with the technology sector, and I was able to really research the market and research tech stocks and research where things are headed. And ultimately, the more research I did, the more successful I became. So obviously, I think that research is one of the things that people sometimes they don't place enough emphasis on, and I think that that's one of the best ways you can prepare for really anything is to do your research and to learn as much about the market as you can and as much about the trading strategy that you can employ as you can. For me, that's been probably the boon of my success over the years.
Yeah. So, training and research, I like to teach. I do one-on-one coaching with folks, and the first thing if someone's seeking coaching is I go, "Are you profitable?" And a lot of times the answer is no. And I go, "Okay, let's take real money off the table, right? Let's trade and sim, and let's do research, and let's prove that you can be profitable." There's no point in continuing that very expensive lesson and proving that you're not making money, right? So I think research and training, absolutely agree. James, I know you're a successful trader. So what do you think has been some of the most important elements to achieving that?
Yeah, so I actually like a lot of the answers that the respondents gave here. I mean, we see this all the time. You ask people what it is that they need to improve on, and I think a lot of it has to do with discipline. People say, well, I move my stops, or I don't set up good risk versus reward setups. And to be honest, I think that that's a relatively easy fix. Like if that's the main leak in your game, you just have to make the decision like, hey, this is the risk reward setup I'm going to take. I'm not going to do anything else. But where I struggled for a long time, and where I think a lot of traders, even those that have been trading for a very long time, can continue to struggle is in market environments like this. We all just sat here and to answer that first question, basically laid out our expectations for very little movement this week, not a whole lot of action, no real breakouts, range bound trading. And when we're in an environment like that, it can be really, really easy to kind of widen out your range for trade setups. Like, let's say, I have a trade setup with unusual options activity where I look for 4 specific factors to be present. Well, when we're in an environment like this, I'm not going to get a whole lot of trade setups on a day-to-day basis. I mean, we use unusual option activity, and I typically can flag 30 orders in a day that are interesting and would require a second look. Maybe 2 or 3 of those are going to give me a trade setup that is actually actionable. Over this past 2 months, it seems like there's days where I flag 4 alerts in total, and none of them are actionable. But after a week of having that happen to you, it can be really easy to say, okay, well, I know I'm looking for 4 specific factors. This trade hit. I haven't taken a trade in a week, but it only has 2 of those factors that I look for. 2 of those elements are present. You know what, I'm going to go ahead and take the trade. It's been so long since I clicked the mouse and put some capital in play here. It's really easy to do that, right? It's very easy to get bored, and I think boredom is like one of the most dangerous things for a trader. And in this type of environment, that happens. It doesn't serve me very well for the customers in our trading room and the people that are watching us trade on a daily basis for me not to take any trade setups. But if they're not there, then they're not there. I mean, I don't need to trade just to trade, right? If I have to sit for a week and look at the screen with no real opportunity, the answer to that problem isn't let's change my setups, let's change my expectations to fit in what the market is giving me right now. It's really difficult, I think, for traders to kind of overcome that. And I talk to a lot of our customers who still have that problem. I mean, we have traders that trade options, forex, futures, stock, and have been doing so very successfully. They impress me so much, but I still hear from them sometimes say, wow, I had a huge loser today, or I lost $4,000 trading S&P futures, but I never really got one of my setups. Well, then when none of your setups came across, you shouldn't lose any money. You shouldn't make any money either. Right. So I think that's like one of the toughest things for people to overcome. And it takes, I think, a lot of losses and mistakes to be made before you start to realize that, hey, I got to take what the market gives me. I can't, try to mold the information that is in front of me to fit in line with my expectations when things are slow or boring.
That's a great answer, James. I love it. Discipline really is doing what you don't want to do, right? And I think you have to have suffered enough pain to go, doing what I don't want to do is better than the consequences of it. And sometimes the absolute most profitable trade is the one you don't take.
Right, and just want to throw one more thing in there. There's an old saying that we would say all the time to try to describe trading to our non-trader friends or those that aren't familiar with it. It's trading is hours and hours of boredom, punctuated by seconds of panic and chaos, right? But sometimes, and we all understand that, right? But it starts to get difficult when those hours and hours of boredom turn into days or weeks of boredom, when there is, we don't have those punctuations of setups that get us excited. It's really easy to after 3 or 4 days of sitting and staring at a screen to go, all right, let's put something on here and see how it works. And even though it might not be a trade that I would normally take on a day that we would have normal order flow or normal action.
It's how many jobs are there where you get up, you take your shower, you get your coffee, you do all your things, you go to work, and the most productive thing you should do at work is do nothing. Right? It's a weird job.
Sounds like a government job.
Job, yeah. I've worked in government, I know that.
Absolutely, yeah. So
Run for Congress.
Most jobs you can find something productive to do, and you'll be more successful if you get focused and you do it. And in trading, that's hard. That's a hard mental shift. It was definitely hard for me to go. It's just like as you articulated so well, James, is the setups aren't there, and and you kind of got to be there to see them when they show up. So it's hard. Great comments. Jason, you're a successful trader. How'd you get there? What are some of the key things for you?
Well, I think for me, one thing that I've noticed, not just for myself, but from a lot of successful traders I've known personally, or, great thing, whether somebody's a novice or experienced, read the Market Wizards books, and you're going to find that there's a million ways to skin a cat to make money in the markets. And one of the biggest things is to find something that is congruent with your personality. Some guys, trend following is the answer. You do your research, get your signal, you hop on, you ride that thing for weeks and months or whatever. You've got your other guys that need to be in and out 3, 4, 5, 6 times before lunchtime. So you've got to find out what's your personality. What are you comfortable with? You want hit and run trades a lot, or do you want to be catching more of a global macro type thing? And then once you do find what fits your personality, you really have to make it yours. And what I mean is you can read the research and the papers and do all the work, but you've really got to have some skin in the game. Have a little bit of money after you're profitable on paper, of course, and make sure that you've got everything tweaked before you go in. I mean, I told you my dad was a trader. I had other uncles that were traders and whatever. I don't trade like any of them do, actually. I had to find what works best for me. And it was kind of a hodgepodge of different takeaways that I learned from different teachers and mentors. And another thing that I think is really important, that regardless of your personality, everybody has to have pretty much dialed in, is your position sizing, or we can also call it risk management. I have noticed from the guys that tend to blow up are doing one of two things. Either A, they're not trading with a system or a methodology that is complementary to their personality. They're trying to day trade when these are the guys that get nervous buying CDs at a bank, or vice versa. You got guys with ADD and they think they're going to be a trend follower when they should be focused on short-term swings. But it all goes out the window if their position sizing is wrong. It's like you get defiant of reality if you're trading way too big. The market goes against you. Maybe you bail out because you're taking a huge loss, so you're getting out early before your stops hit because you're destroying your account. Or even worse, it hits your stop, but you pull your stop away because now you can't afford to take a loss, which is kind of ironic if you think about it. The position is so big, they're losing so much that they think they can't afford to cut the cord right there, so they're risking an even bigger loss. So to me, it's, again, a recap. You got to find something that works for your personality, and you have to manage risk so you can stay in the game, the drawdown periods.
Super comments. I agree with everything you just said, and you kind of stole my answer too, which bummed me out a little bit. I sell a couple trading courses, and I sell my exact set up some trading rules and teach people how to do that. But I always start by saying, this is a starting place. If you don't really have your own system, you got to make it your own. Your comment, right? It's got to fit your, your belief system, your personality types, your psychology, right? You gotta adapt it, because, I may be able to trade a system profitably, but the next person couldn't, and vice versa. But the risk management for me personally, that was what turned the corner for me to becoming a consistently profitable trader. And there's so many trading systems out there, and again, you got to find a set of rules and a market and time frame to trade that works for you. But there's 1,000 different systems that could work for an individual trader, but none of them produce 100% wins, right?
Right.
None of them. And some trades will lose. And for me, controlling that loss was the absolute key, because any trade can fail. We never take one that we think is going to fail. Every trade we take, we think is going to win, hopefully, right? But any trade can fail, and having already determined what the maximum acceptable loss would be on a trade, what the stop is, and then actually getting out of the trade at that level and controlling that loss. I believe you could almost throw a dart and pick trades and be successful as long as you manage the loss and let the winners run, right?
Sure.
And you could be about 50-50, and if you're 50% win rate just by throwing a dart and you've managed your risk and you let the winners run, you're probably going to be profitable. Now, I think there's a better way to do it, and I've got a better win rate than 50%, right? But it's just that important. And you can have a great system that yields great big winners, but if you don't control the downside, right, you can have one or two big losers can really hurt and can really mess up your P&L for whatever time period you're measuring, right? You could have 20 good trades under your belt and have one or two come in that just wipe it out and take you underwater. So that's been the key for me, is just a position sizing I include with risk management. What's the right position size, and what's the maximum tolerable loss? I use 2%. I'm never going to lose more than 2% of my portfolio, of my trading capital on any given trade. Ain't going to happen. I can tolerate that. I can tolerate 3 or 4 or even 5 of those in a row and still be okay, right? I can't tolerate a 20, 30, 40, 50% loss in my portfolio. That is very hard to recover from. Cameron is not here. That's right. Still, too bad, because I know he's got some really, really good insights. All right. Well, great discussion. I think Jason, you touched on paper trading. We're pretty good on time here. What are you guys' thoughts on that? I hear a bit of controversy about paper trading, sim trading. My personal opinion on that is, I think you should prove your trading system and your ability to trade it in sim before you ever put $1 on the line. And I know there's people that say, well, it's not real. It doesn't reflect what you're really going to do in the market. I think those are true comments, but here's my belief, and that is, just because you're profitable in sim doesn't mean you'll be profitable in the live markets. But if you can't be profitable in sim, you'll never be profitable on live markets. That's my belief. Anybody have an opinion on that?
I totally agree with that. I mean, I like the quote that Mike Tyson said, everybody's got a plan until they get punched in the face. But if you don't start sparring, start working your technique and making it real, well, not real, but making it produce a profit on sim trading and paper trading. If you can't even do that when there's no money involved, you have no business putting money on the line. Now, sure, it's just like they say, well, the conditions are going to be totally different when you've got real money. But do you want a guy who's going to go in a flight simulator, learn how to fly, and then take you up in a plane, or you just get up with a guy in a plane who's never flown, but watched a couple of YouTube videos, so now we're going to go fly with this guy? So it's I totally believe you should do some simulation, but I really like your caution. It doesn't guarantee success, but until you have success there, it does guarantee failure in the real world.
Great, thanks. I like your airplane. That's awesome. All right, well, this is the part of the show then where we move where each of the panelists, we get to give our favorite trade right now, and I'm looking forward to it. And looking forward, I got my pin at the ready for the rest of you. I want to see what you guys got going there. So Sam, what do you like right now?
Sure. Well, navigating to our Trading Gods VIX trader, we see right now a pretty good opportunity in the VXX bear call credit spread, and the VXX, of course, is essentially a long position on the CBOE volatility index, right? And obviously, in this environment, the VXX isn't really conducive to go long on. So, a VXX bear call credit spread right now is what we're aiming for. We pretty much base all of our trades on 90% probability of success based on current volatility and current market conditions. So essentially that's what we're aiming for right now. Obviously the VXX is usually trending downward, and we see that this morning, although we expect that to intensify as the week goes on. And obviously with this current position, it's profitable in the event that the VXX stays relatively the same or goes down marginally. So we expect that to happen this week. So that's why the VXX bear call credit spread is what we're aiming to do when it comes to the VIX trader.
All right, very good, very good. I like trading some of the VIX instruments, UVXY, stuff like that, intraday or even for a few days. Those, when they move, man.
Oh yeah,
they move.
Oh yeah, when the VXX moves up, it moves up, right? The last time it happened, I think, was around Eric Rosengren's comments there about a month ago about the Fed. He supports gradual rate hikes. The VXX exploded on that day. So it's good to go in and out when it comes to the VXX if you're actually longing it.
Yeah, absolutely, absolutely. All right, James, what do you like, if anything, or is this this is the sit on your hands time?
So I think in general, like during periods of consolidation and choppy action like this, where we're not getting the institutional order flow that I normally look for, I still can find opportunity around catalyst events. And you mentioned one a little bit earlier, Dean. Alcoa reports earnings this week. Typically, I get short Alcoa ahead of earnings. It usually tends to sell off. It's actually become quite a bit more tradable since the reverse split. The stock used to be around $10, and that's a difficult play with options. It really doesn't trade at a high enough dollar amount for spreads to make sense, and at the same time, I don't like to be just outright long options going into earnings because of volatility crush that happens afterwards. But now that the stock trades north of $30, I think it's super tradable ahead of earnings. Over the past 11 quarters, the stock has sold off 7 times. Moves on average about 6.3 to 6.4% from that earnings date to the nearest options expiry, which would be the weekly options for this Friday. This time around, they're looking for about a $1.60 move by Friday's close, which is about 5%. So I know that even though we have earnings coming through, they're generally underpricing options relative to historical movement expectations. So I know that being long options or being long premium in general here isn't going to be too bad of a do. So with that being said, I'd be looking to get short Alcoa using bear put spreads. Credit call spreads probably aren't going to be the way to go about this because the stock does tend to move a little bit more than what they're implying this time around. So what I'd be looking for is a downside target about $1.60 lower from here, and buying a put spread into those earnings. They actually have earnings coming up here, so I'll be looking to do that pretty soon. Their earnings are in the morning, so probably around 2:30 Chicago time today, I'll be looking to price out those put spreads and get in. And typically what I look for is about anywhere from 2 to 3 to 1 on my money. So I'll look for like a $1 wide put spread that I can buy for 25 cents to 30 cents. And that expires at the end of the week. Quick trade, catalyst based. I know that I don't know for sure that the stock's going to go down, but I'm pretty confident that it's going to move in a decent sized magnitude one way or the other, and giving myself a good 3 to 1 or 2.5 to 1 reward to risk ratio sets me up for a pretty nice trade there.
Great, thanks. And I like your comment on your approach to risk to reward, right? Goes back to my belief about risk management, right? I want to control loss. I never want to take a trade that has the potential to make less than I could lose. Right? It's got to be over 1 to 1 for me. Great. So Alcoa earnings, into earnings. Jason, what do you like? Well, I think you're muted there, Jason. Nothing yet. Looks like he's messing with the buttons. Nothing, right? Nobody else can hear him, you guys?
Nothing, Jason. No.
I can't hear anything from him.
Okay. Well, I'll go ahead and show my chart, do my thing, and then we'll come back and see if we got Jason's audio back here. So hopefully you can see my chart here. I like Walmart to the downside. I mentioned before I use a combination of Elliott Wave and Ichimoku Cloud. And Walmart right now, you don't get a clear, you can get Elliotticians who can argue all day about, the more obscure wave counts. I use a really, really simple repeatable method. I just look for super clear trends. I don't believe in trying to stare a pattern onto a chart. Either it presents itself immediately or it ain't there. And this one presents itself in a textbook fashion. So, last year, right down to this time, Walmart had a very strong impulsive move down. That's a wave 3. Through this year so far, it's retraced up perfectly into a Fibonacci retracement zone of 38.2 to 61.8. And now it is showing clear evidence that the next impulsive wave, wave 5 down, is beginning. And Fibonacci Fibonacci extensions predict that the zone is going to start at 54.96 and below. So I got that labeled on my chart, and we can see, you don't need indicators or anything to go, wow, big move down, a retracement starting the next move down. And then when we throw some indicators in, Ichimoku Cloud is clearly indicating, right, we're below the cloud, the trend has changed, right? We've got lower lows, lower highs, lower lows, lower highs, increasing velocity to the downside. We've got a really nice target. We've got a stop set pretty tight up here. And we took our entry at this blue line, so we're already in profit, but there's still some good risk to reward on this trade, again, with a target zone down below 54.96. And I like this trade in this, just going along the puts. Keep it simple. When I've got a really clear trend direction and a target, the simplest and most profitable way for me to trade that with is just to go one side and go along the puts on this and give it enough time so we get out of the trade before the contract starts its time decay. So we're looking out early next year for this one. So that's my trade idea that I like right now. And that's going to be a few months long. That's probably going to be an 8-week trade, but we're looking for some really nice profit in it. Did we get you back, Jason? Do we have any audio for you? No. Nope.
I can't hear you, Jason.
No. We got the Pink Floyd Comfortably Numb. Your lips move, but I can't hear what you're saying. What's that?
You might have to log off and log back on. Maybe that might help.
Yeah, maybe try that. Okay. Well, we'll just keep moving. Then the final thing is any closing thoughts from each of the participants, and any kind of final statements that you'd like to make, or a link or website you'd like to have folks go check out. So let's go backwards, switch it up just a little bit. James, any just kind of closing thoughts here, and anything you'd like invite folks to go look at?
Yeah, so we always invite people to check out our website at AlphaShark.com. I also always give out my personal email address, james@AlphaShark.com, for anyone that has any questions about anything I talked about here, or wants some more information about what we do. As far as closing thoughts go, I would go back to what I had said earlier about leaks in people's trading strategies, and just kind of let people know that it's my expectation, and I think most of our expectations, for some pretty choppy and sideways price action for at least a little while longer here, and to be really careful about mentally how you approach the markets over the next few weeks here, because there's probably not going to be as many setups as you're used to seeing, and be aware of that and make sure that you're not changing your rules to fit the market that's in front of you, but rather, sticking to the game plan and waiting for things to get better or to go back to quote unquote normal type of activity. And thanks for having me on the show. I always enjoy joining you guys.
Great, thanks, James. And it was good to be on here with you. I always enjoy it with you. Okay, Sam, closing thoughts and any link or anything you'd like people to invite people to check out?
Sure. Well, I will be hosting the VIX Trader monthly webinar series on Wednesday and Friday. You can check it out on YouTube. Go to Trading Gods on YouTube, and you can check that out live 5 p.m. on Wednesday and Friday. Other than that, you can check out TradingGods.net for your latest information on the VIX, as well as on the S&P 500. We are monitoring the volatility market relatively closely. We know that volatility is finding a way to creep back into the market slowly. It is a mean reverting index, so it always reverts back to the mean, and I invite people to reflect on that. The volatility gauge usually is around 20 when it comes to the historical average. Right now, we're very low by historical standards. So keep tracking volatility, and hopefully you'll be on the right side of most trades. And as always, it's always been a pleasure being on the show.
Hey, it was great. It was great. I don't know if I've been on here with you before, Sam, so it was great to.
I think I may have been on once with you several months ago.
One time.
Yeah.
Okay, great. Thanks. Jason, do we got you back? Do we got audio with you?
My back. Can you hear me?
Yeah, now we can hear you.
Yeah.
Oh, great.
Yeah, good.
All right.
So we still got time if you wanted to share a pick idea, your favorite trade right now with us.
Well, I'm juggling chainsaws and playing with fire, so I pretended that I didn't have audio, so you didn't pick me. But I guess I'm gonna throw it out there anyway. GDX, the big gold had a phenomenal start to the year, and then it's been in a meltdown. At least the minor shares. Well, what I like about it is we had a gap down last week. In the last couple of days, we're flip-flopping around the 200-day moving average. So the trend is down. My thought is if we break last week's low, it's just a continuation. We had 2 days of closing below the 200. If you break last week's low, to me, it's still a short. And I'd put my stop above $24 area. That's the high of the day. I think that was last Wednesday when we did touch the 200-day moving average. But as a trader, I only want to be on the right side of the trend. So even though that's my initial bias, if it does start working its way above 24 on a closing, I'd actually consider getting long. And then if we can ever get back above the 50-day moving average, which we've been below for the last 2 months, I'd probably start looking to add to the position. So that's either way. I just can't imagine it not doing something from here. So I like to call it a flip-flop trade. I'll take it either direction once it hits a technical inflection point like the 200-day moving average.
Great, thanks. We traded gold and mining stocks earlier this year when they came off. Really clear the way they came off the bottom, and that was a lot of fun. We did real well on that. I agree. I think it's heading down a little bit more, and when and if the equity markets finally begin a correction, then we could see another move in gold up. But it's down for now, I think.
Yeah.
All right. Any closing thoughts, Jason, and any links or anything you'd like people to invite people to go check out?
Sure. Well, if you want to get in contact with me or see what I'm doing, you can go to smartmoneyinvestor.com. Again, I'm running the Master Trend Trader course there, which is more of a medium term, looking for the sweet spot, just taking the fast chunks out of the trend. I do some mentoring with some of the guys, teaching them the principles of trading, not just trading signals, but how do you manage risk? What's the right psychology? Because I do feel that if you don't have the right mindset, you can give a guy the golden goose and he's still going to destroy the eggs. So we've got to have that stuff dialed in too. As far as comments, it could be tough sledding for the next month, getting through the circus that we call the election season. But longer term, I kind of feel that we're going to resolve in a breakout. My bias would be to the upside. We're just below the all-time highs. We all know the fourth quarter is when the best 6 months begin, and the fourth quarter in general, over time, I think since 1950, the fourth quarter returns have been more than double what the second place has been for quarterly returns. So it's really the time to make money. But just like on this GDX trade, if it goes the other way, don't fight the tape. Stay on the right side of the trend. And if you don't have a setup, don't trade. Go play golf or do something that's just as torturous but doesn't cost as much money. There are better things to do.
Amen.
But, for the markets to give you the setup, otherwise stay away.
All right. And so if the Santa Claus rally stays in the shed, then you're happy to go short, right? If that's what it's doing.
Exactly. If the Grinch comes out, we'll play along with that instead.
Yeah. All right. Great. Well, hey, it was really good. I enjoyed talking with all of you guys. Good comments, good discussion, and good insight on the markets. And I look forward to the next show. So I think we're a wrap, David, and it's back to you.
All right. Thanks, guys. Great show. Just want to remind those of you who are watching, be sure to hit the subscribe button now on YouTube so you can get updates on future episodes. Also, you can go to TimingResearch.com and you can download any of the past reports or view any of the past episodes of the show there. Also, be sure to join us next week. Vince Vora, Fausto Puglisi, Jeff Bish, and Matt Buckley will be back. So, just want to thank all my guests again for this week. Sam Bourgi of TradingGods.net, James Ramelli of AlphaShark.com, Jason Pearce of SmartMoneyInvestor.com. Cameron Yost was supposed to be here today, but he had some technical issues, so we'll have him back on soon. TradingWorks.info is his site. And, of course, Dean Jenkins of FollowMeTrades.com. Thank you for hosting.
All right. Thanks.
Thank you.
Thanks a lot, guys.